All right. Hey, so guys, Tim Hart, VanDyk Mortgage. Thanks for being with us today. You all should be able to hear us, but see the VanDyk Mortgage renovation lending page. Is that correct? Do you guys see the right stuff? Okay, cool. Want to talk to you today. We're going to do a webinar on renovation loans. We're going to be covering FHA 203K. We're covering conventional, HomeStyle, and then VA renovation loans. Matt is going to run the majority of this. He's kind of our expert behind the scenes guy. So he's going to be filling y'all in on all these different products. Everyone is muted for now. We will have a question and answer session. I'll be monitoring the chat as well. So, just do your hand raise thing like you do on Zoom, and we'll be happy to answer any of these questions because we want y'all to take away from this to learn as much as you possibly can. And we're going to get to one slide here in a second, but I just want to make sure for realtors out there that are watching this or with us today, this market is changing quickly, right? Especially in Southwest Florida, we had Hurricane Ian come through and just, wiped everything out, right? And so the demand for rehab loans like this and construction perms and things like that are going to be something that you're going to want to learn about. So I really appreciate y'all being with us today. And I want to make sure before we get in the renovation part, I want to make sure, Matt, if you don't mind clicking the next slide over, I want to talk to them real quick about construction loans. You'll see here, we do offer, and this is going to be, we're going to be doing this about renovation loans, but I want to make sure that at VanDyk Mortgage, the loan officer that invited you onto this call can also do construction loans. We can do a one-time construction loan. We can do a construction perm for FHA, VA, conventional. We can do construction perms for bank statements and also investors, the DCR loan. So we have a lot of construction loan products available too. So if you're listening to this and you have questions about it, get with the loan officer that invited you. We're happy to help talk about that. So now I want to get into the renovation loan. So Matt, if you don't mind, I'm going to hand it off to you and you're going to do your thing. Okay, buddy?
Fantastic. Thanks, Tim.
No problem.
So again, everybody, thank you. My name is Matt Schuttinger. I'm Tim's kind of a backup and help in the renovation and new construction. So we can answer any questions you might have. Don't hesitate, put them in the chat. And then we can get them after the presentation. Let me jump right into it. As he talked about, we really do have the greatest selection of renovation programs. Everybody's probably heard of the FHA and the 203K, but there's also a lot of other ones out there. So let's talk about what a renovation loan really does, right? We really can set the right expectations with the borrowers and yourselves up front so you know what you can and can't do. It's a way for you to also, as a realtor, be able to list a home that may be a little bit of like a dent and scratch and then get them into this home with a renovation program. So you could set it up and kind of sell this with a contractor up front that comes in and says, hey, we could get this up to code or fix this or have a vision. It'll help you sell more homes. And how that's able is it enables the buyer to purchase or refi and close as is, regardless of current condition, because we can do that knowing they're going to fix the problems or issues they may have or do cosmetic things and they want to do it. Some things are just don't have to be fixed, but people want it. So it's more of a luxury item is what we call it sometimes. And then there's really three pieces behind the renovation transaction. You have the contractor, the credit of the borrower, and the collateral. And that's what we really delve into all three of those to help with everything. And then what we also finish up is we set up every proper transaction to properly be set up and disclosed, so your borrowers don't have to worry about anything and your guys are totally protected. It also ensures that the borrower has complete understanding of the transaction. That's where Tim and his team will help the borrower work through everything and all the aspects of what it's going to cost to buy the house, what are the costs associated with renovating the home, the cash required to close, and even to the monthly payment and their rate and everything for it once everything is done on the home. Let's talk about the products that we have. So the VA renovation, not a lot of people know about this, but it's a really great product for a veteran. And let's jump into it. Here's the program highlights for it. Couple things that are in. We need a minimum FICO of a 640. We do allow for owner occupied from 1 to 4 units. So if they're going to buy a 4 unit and live in it, they can do it. The loan limits are kind of different based on purchase or refinance. And really it's the purchase price plus total rehabilitation costs and or as completed value. So why that's important. Sometimes there's some rehab things that go into a home that may not add value. So if the appraised value comes in less than that, we do have to base the loan limit off of that. But again, the VA veteran can do 100% financing. So that's a huge win for the customer. You know, the property types that are eligible, single family attached or detached, modular homes, PUDs. What's not eligible for this is our manufactured homes or historical properties, because you can run into some issues on the historical properties. So those have been excluded. Renovation policy, the big one here is self-help is not permitted. So you can't be someone that says, oh, I want to do my own drywall and let them do it. So we can't do that on this program. A couple things here that are maxes. On the VA, you can do a maximum amount of $75,000. And the things to think about is it has to be non-structural items or non-luxury items. So you couldn't do a pool on this program, but you could do a lot of other things. You could do a whole renovation of your kitchen. You could add a bathroom as long as you're not moving structural walls. You could replace a roof. You could paint the outside. You can do landscape. So those are all things that would be allowed in there. And again, it's max of $75,000 in the repair amount. Again, they can go all the way up to, a $715,000 loan amount. So you have plenty of room here to do a bunch of renovations. The FHA 203K renovation can be broken into two different categories. And this is where it becomes a little bit different on the program, because there's what's called a streamline and a full renovation. And let's talk about the differences between them. A couple things here. Again, it allows down to a FICO score of 640. You can do a 1 to 4 units, again, as long as it's owner occupied. The non-occupant co-bars are not permitted on this program, and that is a difference from a regular FHA loan. So you do have to qualify on your own as an owner occupied. So keep that in the back of your mind. Again, the property types are the same as the VA, the single family attached, detached, modular homes, PUDs, ADUs. You can't do it on manufactured home or historical properties. And really the big difference between a full and a limited 203K is the rehab amount. So $35,000 and less is a limited 203K, which means you don't have to have a HUD counselor. And again, that's a lot of cosmetics. So it's very similar to the VA, but again, it's capped at that $35,000. If you go above $35,000 or you have structural repairs, you do need to have a HUD consultant. And there's a list that we can provide, and then Tim and the team can get out to you, but you have to have a HUD consultant, and there is a fee for that HUD consultant to work on it, but it's someone that's been approved and accepted by the Department of HUD that comes out and reviews the contract. So there is an extra layer on that for the renovations for an FHA. But again, what's great, maximum financing. You can get up to 96.5% on the financing, and you can do it on a purchase or a refi. So again, if you're looking at a home that someone may not be a VA, so they can't do 100%, and they may have a little dent and scratch on the credit, or they have less down payment, you can put this together and do a renovation on a kitchen, bring it up and clean up the kitchen and make it nice and better for the customer. The maximum also is $75,000 on this loan amount for the full 203K. So keep that in the back of your mind. Again, that's the same as the VA, $75,000. Is the big difference there on both of those programs. Hey, and again, the really only big difference between the streamline and the full 203K is the amount or structural repairs if you need a HUD consultant.
Hey, Matt.
Yeah.
Question came in through the chat on FHA 203K. If it's an eligible condo, meaning it's already been an FHA approved condo, are you able to do those?
We are not.
Not okay.
Yep. Because sometimes what happens, people want to do, and the reason being is might have to go to the condo board. They may want to change windows and stuff like that. And then also on the interior, you have different issues between what is actually condo property. Because some of the condos, they actually own to, like a knee wall or a half wall and different things like that. So you can get in some issues with that. So that's why we don't do those.
And I also put a note in the chat that just a reminder, FHA loan limits, we go with the FHA loan limit and it's per your county. So every county is different. So make sure you check that out as well.
Absolutely. Great call out. Thanks, Tim.
Yeah, man. Keep the questions coming, folks. That's what I'm here for today. Okay.
Absolutely. The Fannie Mae HomeStyle is your conventional rehab. And to be honest, besides the VA, which not a lot of people know about, the HomeStyle, Fannie Mae HomeStyle is a really great product as well. And it's probably one of the best ones for the mass majority of people out there because it gives you the most flexibility in doing the loan. So a couple things here. You know, it's a 680 credit score. It's only allowed on one unit property. So we can't do a 2 unit or a 3 or 4, even if it's owner occupied. The project type is again the same thing. So you can do single family attached or detached, modular homes, buds. You can do ADUs, which is another nice thing. You can actually build an accessory dwelling unit on this product. So it's kind of cool that way that if you want to put in what some people call like the mother-in-law suite or something like that, you can do it. Again, manufactured homes and condos are not eligible. There is a DTI requirement here, 47%. You can't go past there.
Hey, Matt.
Yeah.
I want to interrupt real quick. Sherry Carlson brought up a great question. I meant to say this, that this presentation, just if you're on this, just shoot us an email, shoot loan officer an email. We'll be able to share this presentation with you so you have it. So I meant to say it in the beginning because I think Sherry Carlson's hand is ready to fall off from writing notes from you, Matt. So I just want to make sure I jump. Hey, and one other thing, another question that's coming through, and I appreciate the questions. For any of these programs, are they able to pay off debt at closing to qualify, like a vehicle loan or a credit card?
Yeah, so we can do that under certain conditions. It's different for each program, but you can do it. You can't use proceeds from the loan to do it because that would be considered a cash out. But if they had cash of their own, they can do that to help qualify. Yes.
That's for all three of these?
For all three. There's
Okay,
different
thanks.
options for each of them. Correct. Any other questions you want me to hit before I see there's a couple things in the chat? I don't know.
Oh, no, I'm hitting you with the chat. I'm getting some private ones too, but no, keep going
Okay.
on I think you were talking about the DTI at the time.
Yeah. Okay. So that's the debt to income. We do cap it at 47%. So that is what's called an overlay to make sure that the person can qualify. Again, on the renovation policy, there's a couple things that are good and things. We don't allow self-help. So again, you can't be your own contractor. I know that there's some people out there that are like, oh, well, I work at this, I'm a general contractor. I want to do the work myself. Unfortunately, we can't do that. And the thought process behind that is we don't have enough money that if something goes bad on the project, we don't have enough money escrowed for another contractor to come in and finish the project. So that's why we really don't do the self-help. HUD consultants are not permitted on this, so you don't have to worry about getting one. The repair. Go ahead.
Sorry, I just keep jumping in here for you.
Yeah, go ahead.
That's what works, man. This is fun, isn't it, Matt?
It is totally. I love it.
All right, good deal.
Yeah.
So I got a couple different questions coming in, but also on the owner builder. Just so you guys are aware, we can do owner builder construction loans. We have a source for that, but we're just talking about the renovation loan itself. You have two questions coming in. Cynthia asked, can you explain DTI a little, the debt to income ratio, maybe what you include in that? And then Dee Dee had asked, can we use a licensed contractor or do we have to use a specific vendor? So I think it'd be as long as we get them approved, right? You're fine with that?
Yep, correct. We can do anyone as long as they just have to have whatever licensure is required by the local community. So if they don't have to have any license in a community, because like say there's no specific requirements for that, we don't have to have it. They can just be someone that has built homes or worked or renovated and stuff like that. We do a small application just to make sure that we know this person has whatever is required, but it is not as vigorous as a requirement or application as it is for a complete new construction. Obviously, we look at that a little more intense. But yeah, here, you can't be your own, but yes, you can bring anyone and we just want to review them and vet them out a little bit for that policy, for doing the build or the renovation, sorry.
Cool. And then Cynthia asked about the DTI. So, I mean, you got max 47. I assume that's the back end.
Correct. Yeah. So for those, everyone, DTI, debt to income ratio, correct. So we say the 47% is your back end ratio, which includes all monthly debts, including your PITI on your payment on the new home, on the new loan. We do just look at tax returns or W-2 pay stub. And if they make $10,000 a month, we'll let them have up to $4,700 in total debt a month, and that's how you get to that 47%.
Cool. Thank you.
Yep, no problem. The repair amount is kind of a little odd number here. So I want to make sure you think about this. So there is no limit on how much you can do on the renovations. But it is capped at 75% of the as completed value. So let's think about that. What if you had an example, and let's just use real simple, and let's say you were doing $1 million renovation. Actually, let's not do that. Let's do 500,000. You had a $500,000 in after improved value. If that's what the appraisal says the home is, we would multiply the 500,000 by 0.75. And that would come up and say, we could do 375,000 in renovations. And that can become an issue. So you just got to think about it. But basically, this is the loan that you can do just about anything you want to do on your home, as long as it can appraise out. And what I mean by that is, if you're not adding necessarily good square footage, it may not be appraisable and get enough of an appraised value. So you always have to keep that in the back of your mind, that when you're working with one of your borrowers and doing one of these, if you're trying to justify it, think about the after completed value, because that's what we're going to look at for that. And what I mean by that is, I had a situation where they wanted to knock a wall out and put a doorway in from one wall to another. It didn't really add value. It made it feel better for that customer, but it didn't add value to it. So just kind of keep that in the back of your head on the as completed value. But again, here's what's win here. We can do full luxury items. So if you want to put a pool in, you want to put a pool house, you want to put a pool with an ADU, you can do that on this loan. And again, it can go up to 75% of the completed value. So this is where the really big win is. We do have an option for a complete teardown and reconstruction on our new construction product. We can't do it on this one. So keep that in the back of your head. If someone wants to tear down a house, we do have an outlet for you, and Tim can get you connected with that. And it goes through our new construction program, but you can't do it on this renovation. It's a little different just because the code and their permits and what you would need to do. We want to run that through our new construction program. So kind of why you want to work with VanDyk and Tim's team, here's the great news. There's no requalification at the completion of this. So when you as the realtor get the loan and you're selling the house and you're done in 35 days or whatever, you're done. The borrower doesn't have to worry about requalifying when it's all done. We also don't have excessive overlays. We've talked about the big ones right now, where I had the credit score, we had the loan limits, and we had the DTI on the one program. So we don't have any excessive overlays. So that when Tim and the team take a loan and they get it, they have an approvable loan. So that's great about that. We also will give up deposits at close. And again, we don't require permits prior to close. Even if they're not required, that's even better, but still, boom there. You're also paid the realtor commissions at the closing. So you don't have to wait for the house to be completed before you're paid your realtor commissions. So you get that all up front. The process, how Tim's team will do it, you get a scenario, and that's what the cost calculation sheet is. We work up a scenario, figure out what the house you have to buy, how much in renovations they're looking to do, and then we run the numbers and structure the loan. We get the loan submitted into us in the underwriting group and looks through it, and they do the whole process. So they do processing, underwriting, project review, all in-house. Everything's done with Tim's team. So it's great for that process. You've got one-stop shopping. You don't have to worry about going somewhere else. And then you've got the closing, and then it goes into the draw administration. So at the closing, everyone's there. You can be there, obviously, to help your borrowers on. And then that's when they really start on their next journey of getting the house built. And we work with the contractor and the homeowner to get the home built with draw administration going out. I know there's some more chats in there. I just saw some pop in. Is there?
Yeah, I've got a couple coming through here. A couple things.
Yeah.
How long would you, if someone's going under contract to buy a home as is, needs repairs, how long of a closing date should you give, and does it vary for the different loan products?
So that's a great question. What I always tell everybody, because I think, and Tim, I think believes in this as well, we're big under promise and over deliver. So I always tell everyone, shoot for a 45 to 60-day close on your contracts. And if we get closed in 35 days, you love me. But if I tell you 30 and we close in 35, you're not going to love me. So I always try to tell everybody, and it's the same for all the products, use a 45 to 60-day product, and it'll work well, and you'll be in good shape. The borrower has to be motivated, and we need to engage the contractor pretty quickly. But as long as those are going, we're going to close it in no time at all for you.
Yeah. So to be safe, 45 days.
Yep, absolutely.
Yep, gotcha. I know we have a question. We have a unique thing down here in Lee County where it's called a 50-50 rule. Hal, do you want to unmute yourself? And because it's pretty unique down here. They have a rule where if the and let me see if I can unmute Hal if he wants to be unmuted. Hal, do you want to be unmuted, buddy? There you are.
Yeah, can you hear me?
Yeah. Do you want to let Matt know your question?
Matt, following up Hurricane Ian, the FEMA 50% rule has really started to come to light for us. FEMA is saying that if you have more than 50% of the value of the building itself, not the lot, not external improvements, pools, cages, that type of thing, but 50% of that value, if you exceed 50%, then you're going to have to go in and come up to the elevation now required by FEMA, which is the base flood elevation plus a foot.
Okay.
So you can go 75% LTV on your product, but administering this, I know the Lee County Commission just voted to change the way the 50% rule is implemented. It used to be all inclusive. The whole package had to become in under 50%. Now they've changed it so that it's as long as each individual permit is under 50%, it'll be okay. But if you got to go permit by permit to get it done, how long do you have to do construction to stay within that?
So this is a new one for me. So explain what you mean by go permit by permit when you just get the overall permit.
Okay. In other words, if your house got 4 feet of water in it.
Yep.
Okay. And you are below the current FEMA requirement for elevation.
Right.
Then the overall repairs have to be less than 50% of the value that LIPA or the Lee County Property Appraiser has on record.
Okay.
For just the home.
Okay.
Net out the lot, net out all the rest.
Okay.
And it used to be like looked at as a package deal. That's the way the old ordinance was written. From what I understand, the commission just changed that so that you can consider it like if you got to go get an electrical permit to do the electrical work, you've got to go get a permit to put in new cabinetry or whatever's required to have permits. As long as the permitted piece, you'll have to have a roof permit, for example.
Right.
So if the roof permit is less than 50% of that value, then you go to the next value. I'm not certain, because this is also new to us too, whether you have to do those sequentially or if you can do them simultaneously.
A lot of the ones that I've had where they've had to have multiple permits, you're allowed to apply for all the permits at one time.
Mm-hmm.
You just have to have your plans and specs for the different items. We deal with that a lot of times when we're doing a new construction. So I don't see it as being anything really different by that. That's why I was kind of thrown by your question. I think it actually lends better to you that you won't have to do total tear downs, because they're saying, 50% for the roof, 50%, and I don't know one single item that's going to get you above the 50% of value. So I think that's actually a win for the homeowner, because that way they don't have to raise their house up on stilts, basically, to get to that number. So I don't think that would impact us. I'm trying to work through that, noodle that through in my head. I mean, I couldn't imagine a city code enforcer or a permit office saying, oh, well, no, you have to do this, complete the roof, and then we'll let you go do this. I can't imagine that. But again, we would default to whatever the local community. If it's a stricter standard than ours, then we'd obviously have to default to that standard in that community. But it actually sounds like it's going to be easier for people to do renovations because, again, to your point, it's 50% of each permitted item.
In theory it is, but then Melissa's just put on an additional chat that sort of talks about how the contractors are not going to do interior work or even apply for the permit until the roof is finished. So
Got
you're
it.
going to end
Okay.
up having to go in sequence, which is going to stretch the time out.
So what I'll tell you is obviously on the Fannie and the VA, or the VA and the FHA, it's a little tighter timeline. So it's probably not going to be the best scenario for that one. The Fannie Mae has a lot more flexibility in it. And again, I'm thinking most of these homes are going to have more than probably the 75,000 in renovation.
I think the majority of loans, Matt, you're talking about, especially for our area, are going to be your conventional,
Yeah.
mortgage that you're talking about now.
Yeah. So I think you're going to be fine there because it definitely has more flexibility in a timeline. And again, if they come to us and they say, okay, we try to get you done in a certain time, right? We don't want this done over, the next 24 months. But obviously, as long as and this is how we feel about it, as long as the borrower and the contractor are actively moving ahead, we have no problem extending out these loans going forward. What happens is at 16 months on a Fannie, and this would be the longest case scenario, you don't have a saleable loan to Fannie Mae, which means Tim and the team would have to come in and do a takeout loan, another loan for the customer. Because Fannie cannot exceed 16 months.
Okay.
So typically at about the 15-month mark, we're kind of like, we need to wrap this up, or we're going to continue to work with you, but you're going to have to do another loan and pay this loan off. Does that make sense?
Sure. Now, do these loans require the use of a general contractor, or is the owner allowed to contract them out by trade? Like he could go get an electrician on his own, get a roofer that's different company, get a plumber that's a different company, flooring company that's different.
So what I'll tell you is it depends on the scale. And what I mean by that is on a VA, yeah, absolutely. It's under 75 grand. It's nothing structural. They can act as their own general contractor. On the 203K, same thing. They can act as their own general, get subs for sure. If you're getting into the Fannie Mae and you're doing a couple $100,000 renovation, we're going to probably 99% of the time want a GC on the deal. Now, it doesn't necessarily have to have that license as long as the work that they're doing doesn't require a general contractor's license. Does that make sense?
What work does require one?
It's whatever individual communities require. So we follow whatever the community county standards are. So your county board would say, oh, and your contractor is going to know. So he comes into the house and he goes, oh, well, I can do these 3 things, but I can't do these. Right. So they'll know that. And again, we don't have any overlays. We go to whatever the county recorder or the county auditors, not the county auditor, the county office requires.
Gotcha. Okay, thank you.
Yep.
Hey, how good questions, man. That's so important to our community right now. And Miss Yeomans, I got you. Message me. I think I did misspeak. I acted like the 50-50 rule was just for Lee County. It's anyone participating in the NFIP. So thanks for pointing that out. Melissa, thank you for the info you're putting in there. Did you have anyone to add? Because you're dialed in on this one. If you do, feel free to unmute yourself. And then does anyone else have any other questions that we can help with? Cynthia, are you trying to unmute? Do you have a question? Oh, she's trying to hide herself. There we go. I saw her going for her phone. Matt, so you were kind of, I think, wrapping this thing up, right, for the process here?
Yep, absolutely. We're just ready to go and grow with you guys and help you sell more homes. That's what Tim and the team are here for. I'm kind of just a subject matter expert in the back. So we're ready for you to help you. And when you're going to go do a listing, reach out to Tim or somebody on the team and they can help you come up with some ideas of what you could do and renovations and what are options for you. So that's really it.
And Matt, just so you guys know, you got a couple things before you log off here. I want to make sure y'all are aware, our branch is in Fort Myers, but we're licensed in plenty of other states. We have loan officers all across the country. Some of them invited you here today. You have questions, concerns about it. I mean, I see Sean, Tony, Jerry, Rich on the call, right? Bill Sweeney. We have Ashley's on here. We have a lot of loan officers, Kimberly, on the call that are here to help you. So reach out to them right away. For any questions or concerns you have. We're going to be doing more of these webinars. In 2 weeks, we're going to have a webinar. It's going to be on interest rates, how they impact your business, and how you can move forward with that, because we are in a rising rate environment. And then 2 weeks after that, we're going to be going over reverse mortgages. Again, you guys, you're going to have to be learning new products because you're going to have to expand, right? Market's getting tough. You're going to have to expand with your products that you know, and same with us. We'll be learning reverse mortgages as well. Well, not all of us, but some of us will be. So I want to make sure y'all know that. Be on the lookout for your email, text, etc. That will be sending that information to you. Does anyone have any other questions or concerns they want to talk about? You can unmute yourself, drop it in the chat. We got Matt here, and I want to make sure we get everyone taken care of. I don't see anyone jumping in just yet. What's up, Lou? How you doing, buddy?
Doing real well. Thanks for asking, Tim.
Good deal. Thanks for being with us today. Hey, and if you guys have any questions or concerns you want us to ever cover on a webinar, please let us know. You have topics that you know in your office is a concern. Bring it up to us. Ashley just put that in the chat. It's a great tip. We're here to serve y'all, provide knowledge, provide value to you. So again, anything we can do to help you out, keep us in mind. We also have that webinar on construction perms available to you. It's recorded. Let us know if you want to copy that. It's on YouTube as well. And then we'll get this presentation out there to you. Matt, you got anything else you want to add?
No, again, think of Tim and the VanDyk branch as anything for your lending needs. Anything you need, reach out to them. They've got a resource or a source for you, and we'll get it squared away for you.
All right. Hey, we appreciate y'all. Thanks for being with us. Hey, Hurley's, thanks for being with us. Caldwell Banker, we see you. All right, y'all. You have a good day. Thank you, everybody. Reach out anytime we can help, okay? Bye, guys.